Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 17th, 2019. In this video, I want to go over the charts of gold and the US dollar. Had an inquiry in the trading room. Plus, more importantly, it's something I think we need to keep an eye on. It's setting up, I believe gold's setting up for the next big move, and I'm talking about a trend trade where we can put some positions away in gold, maybe silver, some of the other precious metals in the mining stocks for more than just a few weeks. We're talking a few months, maybe even more. Alright, so let's start out here. No particular order. I'm going to start out with the long-term chart, a weekly chart. Time permitting in the video, I have a ton of charts on gold, the US dollar that I'd like to show you on some different charting platforms. Time permitting, I'll maybe get to those, and if not, I'll post some on the site. But this is one variation of the long-term outlook for gold. Having this downtrend line here, it comes off the bull market high. Last bull market in gold ended back in 2011. And you can see the downtrend line there. I've talked about this quite a bit. So really what stands out to me, it's a symmetrical, a large triangle pattern. There's your downtrend line. There's a uptrend line. Not a lot of reactions on the uptrend lines. I'm not putting too much faith in stock or weighting into that, but the downtrend line has quite a few. So we have a breakout, a back test, and I still favor a move up. Back tests can be tough, especially on a weekly chart. Every week you back test, you come in at lower and lower levels. And there's no way to say how long you'll back test for. But again, by the time I'm done with this video, we'll hone on down to the 60-minute charts, try to get some timing down on the entries for the next trade in gold. But that's it. So I expect a reversal here, move up to 130 in GLD. That's a pretty well-defined resistance level going all the way back here to the last bull market. We had reactions off that level, and maybe a little consolidation there, and ultimately if we can punch on through there, I think we're looking at a really nice move. Right now, gold has been mostly sideways to slightly upward since late 2015. That it bottomed here. So, whether or not we're in a new bull market for gold or a continuation of the last bear with another leg down, it's really indeterminable at this point in time. You can see we've moved up. Clearly moved up since 2015, but we're also making just ever so slightly lower highs, so that's really not a true definition of an uptrend, because to have an uptrend you want to take out the previous reaction highs. So here's what we need to do. We need to take out this high, take out this high, and if we do that, we're going to have punched above my 130 level, and if we can do that ideally before gold takes out that previous reaction low, then again we have we're in a slow grind higher. We'll call it a bullish trend in GLD. Daily chart starting to look interesting. In fact, silver, I'll get to silver in a second, even looks a little better. Here's the levels. I've shared these for weeks and months now, actually. We had a divergent high, and that was a catalyst for the correction that we've had so far. We don't have positive divergence at this point, technically speaking, because we've made slightly lower lows in these indicators here. Silver has some divergence there, but we are coming up to support that 120-ish level. I think it's still a pretty decent support level. I'm going to show you some of the reactions. You can see the reactions along this chart. So there's may provide an objective entry, but I can tell you right now there's not any buy signals. We're going to look at the euro in a second here, and I think when we get the breakout in the euro, if that coincides with gold at around this level, great. If not, gold could continue on down. It depends when the dollar finally reverses trend. But the next support I have, and it's a good one, but it's all the way down here at about 117.40. You can see all the levels here, big gaps, a lot of gaps around that area back in 2017. Nice major reaction low right there in late 2017. Some reactions there. Once we broke it, we fell quickly, came up, back tested. So I just see a lot of reactions. This level stands out to me as technically significant. Again, do we get there or not? Right now, the trend is certainly bearish in the near term in gold. 60-minute chart does have, however, remember I just showed you we are at support on the daily chart, and we have divergence. In fact, that divergence has been building for a while here on the 60-minute chart. Here we go, all the way back to here. There's your positive divergence. Again, we don't have a buy signal yet, but and there's some resistance here. So if you want to try to hone down on an entry on GLD, that was support right here. It's not super well defined. Remember, GLD is trying to track the futures. It does a very good job, by the way, of tracking gold prices, much better than many other ETFs that track other commodities or precious metals. But there it is. So we have some resistance, and here's, I'll just be direct. This would be bullish to see gold reverse soon. Let me color this line here and take out these levels. So watch maybe, because if we reverse here, watch that daily chart. We'll have held support, successfully defended that support level we're at. Look for, the more impulsive a move up, the better it would be. Maybe put in some type of bullish candle on the daily, and then maybe a little downtrend line here that might come into play as well. So that could be this may be a wedge that's forming here in GLD. So watch that. But it's all going to be about this guy here, the US dollar, or I like to use the Euro US dollar pair. Let's take it out, start out in the long term. There's my weekly chart of Euro US dollar. There's, you can see, as pointed out at the time, big bullish divergent low, positive divergence at the low. That was a catalyst for this very strong rally in the Euro US dollar, and that the Euro US dollar pair broke down here. Remember, this is like looking at the dollar in reverse. When this is going up, the euro is rising against the dollar. It means the dollar is falling. That was a catalyst for that rally in gold, because the dollar was falling as the euro was rallying here. And so far we've had the correction in gold recently in the weakness, and that's because the euro fell. And again, this isn't random. This was identified in advance, all these lines and the divergences and everything else. So it was no surprise that gold has corrected. There's your divergent high right there. And as I always say, divergence is not a sell signal, negative divergence. It's merely an indication that an impending trend change is likely. But what is a sell signal and what was the breakdown of the well-defined uptrend line right there. So we broke down. That was your sell signal. Now we've come full circle. We are setting up on this weekly chart in a nice bullish falling wedge pattern, complete with bullish divergence. And so we need to see a breakout. We need to see something convincing. So it's right now a setup, and we come down to the daily chart. You can see it a little bit better. I have a few different trend lines, but the ones that stand out right now, or my BOD trend line, benefit of the doubt, is this white trend line here. We had a little false whipsaw signal back at the FOMC meeting there. That was just one day. That was FOMC noise. But we're below there. But look, a lot of reactions. Note all the reactions on this trend line lately. So that's the level I'm watching. And again, ideally you want to see an impulsive breakout above that level, and that would be a early potential buy signal for gold. Again, you have divergence also confirming that falling wedge. That's what I like to see. First stop up here about the 115-ish level for the Euro US dollar pair. That should also come into play with this potential downtrend line I have there. So this is how it would play out if we get a breakout soon. The euro rallies, meaning the dollar falls, gold rallies along with it, comes up here, probably have some, maybe, most likely a consolidation around that level. It doesn't have to happen, and then your next buy signal would come on a solid break above the 115-ish level, and that level there, you can see my next target up here is about 118 on the euro US dollar pair. Pretty significant level. So these are levels to trade around. And 60-minute chart, there's an uptrend line to watch. Remember, the trend in the euro is bearish, meaning the trend in the dollar is bullish right now until it changes. So one thing we're watching here is, or at least I'm watching, about that 113, 248-ish level. You can see I have a resistance line right there. So we need to pop that. That might be your early, if you really want to try to hone down on a breakout in the euro US dollar pair, it would be a break above that level. This is support right here, 112.802. You can see the line, and then below that we have uptrend line support. That's not good. If this breaks, not good for gold. Means the euro's dropping, means the dollar is going to rise, and gold will probably come under pressure. And then everything else, don't forget about the stock market. Gold probably won't rip until the stock market finally makes a true turn. And for that, we're watching those trend lines on SPY, on the daily chart, SPY, QQQ, and XLF. So you want to kind of factor all this in. I know I'm throwing a lot out there, but you know, you want to get the trade right on gold, you want to confirm it with the US dollar, and you want to confirm it with the stock market. That would certainly help, because as long as stocks, especially tech stocks, are rising, which they have been, it's a risk on market. And gold is a risk-off asset. It should rally in line with treasury bonds or other risk-off assets. And so there are times both gold and the stock market rally. I'm just trying to tell you, it would certainly help to see a pretty sharp correction in the stock market. That should give gold a boost. You know what, before I forget, once again, in this morning's video when I covered the things I was watching, I had this on my list, but I didn't click on the chart. I have so many charts loaded and running, you know, multiple monitors. I had a breakout today in palladium futures. This is symbol PA for the palladium futures, or PALL is the ETF. I was watching this downtrend line, had a breakout today, and it's already rallied over 2%. I wanted to point it out. You know, we had a divergent low in it here, and this is a potential target. I don't know if it's going to go straight there. Could come back down. It could also, there's plenty of room to make another divergent low, and there's actually some nice support on palladium futures a little lower. So again, this is hindsight now. It's not, I wouldn't chase it at this point in time, but watch it. If it comes back in, if this breakout fails, or even if it taps that 1400 target, 1406, and comes back down, it may be setting up for a move as well. Okay, and here's this is the silver ETF, SLV, and I'll tell you, whereas gold, I'll jump back to gold, I'll tell you where it's at compared. You know, gold had a stronger run. A lot of this was due to the correction last quarter, and that's why we were long gold during the meltdown in the fourth quarter and into the new year. We were long this gold as an official swing trade and long-term trade because of the flight to safety bid that I figured it would get. It wasn't getting any respect or credit when the market topped, and just like treasury bonds, I added those on too. I knew that odd, unusual disconnect where stocks were going down and yet gold and treasuries were going down as well, that wouldn't continue, and it didn't. So what happened? We got a flight to safety bid on both. Now where I'm going with that is what it did, it carried gold up quite a bit higher than silver, because although silver is a precious metal, like both gold and silver, both industrial and precious metals, they're used for both purposes, but gold of the two is more of the go-to flight to safety currency alternative, etc. And so therefore it had a pretty sharp rally, and it came down, as you can see, to my 120 support level. But this level here, this was a sort of a basing type pattern, not as well defined as silver, but right here. So where I'm going with this is the comparable level that silver has already fallen to. So silver is at a pretty good support, and you know, let's jump back to that. I just wanted to point that out because you can see the reactions from late 2018 there, and back from mid 2018. So let's go back to silver. I just wanted to say that another way to look at it is probably less downside in silver. Plus it's just looking at the charts. It's a better looking chart because we have positive divergence, where I just showed you on gold a minute ago. The divergences were just slightly taken out. We don't have them anymore. Now they're not confirmed yet. We need to get a reversal here. We don't have a buy signal on silver yet, but I wanted to point it out for you traders. You can trade, you know, silver futures or this ETF SLV, but pretty nice support there, right around 14. You can see it there, and again, it's really this basing pattern here. Silver base put in a double bottom, so you can, you know, double two lows, equal lows is a double bottom. It's also a W pattern there, and then a breakout. We had a rally. Again, it didn't carry as far as gold because of the reasons I mentioned, but we've come back and we've fallen to that support. So I have silver at a pretty decent support with positive divergences and a nice little downtrend line as well in which to trigger a breakout. So keep an eye on that one. We also have some resistance here around 1433-ish. But if silver breaks out, you can see a trend line that comes off to the left of my chart. Here, let's go out a little farther. That is off the highs in early or mid 2017. There's the downtrend line. So that's one potential target right there for you on silver. So watch silver. Some of the silver mining stocks are really looking good. I see others that are toppy right now. I'll have to do, that's a whole nother video in itself to cover the miners, because there's so many stocks there. I just wanted to point out silver. And then PPLT, I showed you the platinum futures. Oh no, I told you PPL, it's PALL, it's palladium. So here's palladium, there was that divergent high, the breakdown I recently highlighted there. There's some decent support, and palladium futures also have support. So that's one scenario. I can see the PPO here turning up on the daily, curling up quickly, poised to make a bullish crossover. We are very oversold. You want to buy this, step in and buy this when it's oversold, and you've been rewarded each and every other time so far. So maybe there's going to be more upside to this. Maybe that's it. Just keep an eye on it. If we get another thrust down soon and come on down to that level, then we have the potential for maybe a divergent low and set the stage up for a long entry on palladium. Okay, so a few minutes left and to keep this video not too long. I'll just go over some of the charts I have on stock charts. These are charts I've kept for years. So much here, but let's see what to cover. All right, this is a gold weekly chart. Well, let's talk price first and foremost, because that's always the most important thing. So, and you'll see sometimes I'll have alternative trend lines on things. This is a downtrend line right here. In fact, we have two, and they run roughly parallel. Let me change the color on these real quick for this chart. All right, so I have this trend line here. We had a price channel, if you will, falling price channel on gold, and this is spot gold futures. Gold futures continuous contract. That just, they loop all the continuous contract on. If you're not familiar, futures have expiration dates. They expire every so often, and what they do is they'll just loop the futures together to give you what they call the continuous contract. So these are gold futures, and you can see what's trading in this wedge, big, nice, strong divergence, everything all pointed out back at the time, and boom, that was the bottom in gold so far. It came in December 2015. The bottom was right there on that divergent low. Broke out above that downtrend line, back tested once, had a nice rally, came in and back tested again. Another successful back test. So and so far, like I said, moving mostly sideways since then, so it hasn't failed that breakout. And then I also have this alternative trend line right here. You can see which we had a couple reactions. It capped it, broke out, back tested, moved up, back tested again, and it's moved higher. So really, again, we've been trading sideways. So that's why I've had more in and out swing trades on gold in the miners. I'm really hoping to see it break above those recent highs at those levels I talked about earlier on GLD, and really open the door for the next trend trade, long-term trade. And until we get it, I don't want to jump the gun. We'll certainly look at some swing trading ops, and that's why I'm doing this video. I mean, you might get a long entry tomorrow on the euro and gold and all those, and silver and stuff, but this is just a bigger picture, because we're looking at, if I didn't make mention, this is a weekly chart, and you can see it goes back all the way to the 90s. So there was your last bull market in gold right there. Ended in 2011, bear market, and again, this is it's mostly a sideways market. Let's just not call it that. But again, we're still well off those lows back from then. The other takeaways, if you look up top on the chart, you can see these are the overbought readings back here, and I have some notes since 2011 top in gold, new secular bear market. The weekly RSI has failed to exceed the 70 level. I wrote that back here. You could see that we were in a bear market, and the RSI was never even getting up to 70 until recently. So we've gotten up there, but we haven't seen these extreme overbought readings because we're not in a strong bull market. We're kind of in a sideways market. But another takeaway is just look at the you can see the red shaded areas right here. That means oversold, and the green shaded areas. That's anytime we crossed above 70, and it's kind of really simple stuff. You go long when gold is oversold. Again, I try not to use those as a standalone buy and sell signals. There's usually some type of buy signal confirmation. But look what happened every time you were oversold on gold. You went long. That one you had divergence. You got a little bit lower there. But and that was also in a bear market. Remember, in a bull market, oversold is a usually one and done. You get it, and that's a great buy signal. This is kind of a sideways market, but the same things work. You know, oversold, get out. And that's we were oversold on the weekly chart there, and that's when gold topped. We were oversold here, and that's when gold topped. So anyways, those are things to watch. But when you get that sideways trading, you don't have a lot of clues off the indicators, at least the PPO. Oh, and we are back to that 50 level on the RSI again. It doesn't always define active support or resistance, but a lot of times it does. And you can see here, there's a period there. You were buying pullbacks on or around the 50 level, and it was working fine. Here's one other chart. There's a lot on this chart. Maybe you can freeze the screen, the video, and read the what I'm looking at here. Couple things that stand out. Just on the top, you can see RSI. This is an RSI 5. By the way, it's a monthly chart of the U.S. dollar index. So the RSI has to do with not the price of gold, which is right here, but the U.S. dollar on these monthly candlesticks. And it just shows you get overbought, that usually equals tops in the dollar, and oversold is bottoms in the dollar. Lately we just came off an overbought reading, but what I wanted to point out here, you can't make it out. This is the BB width, Bollinger Band width. If you're not familiar, Bollinger Bands, look it up. They're useful tools. These are the Bollinger Bands here. These the shaded area you can see right there, there's the outside line. Here prices are walking along the bottom of the Bollinger Bands, and there's a lot of ways to use the Bollinger Bands in trading. Some people use pierces above, or here's a candlestick. When you pop above the Bollinger Bands, you could look for a reversal, things like that. But and that's great ways to trade. But here's the thing, Bollinger Bands I only use at extremes, such as pierces like that. But I like also very much to look at the pinches, the contractions. What is that? Well, here's a pinch right here in the Bollinger Bands. You can see they came in and contracted and pinched to a tight level, and it's from those pinches that the big moves usually come from. And one way to look at that, other than visually looking at the Bollinger Bands, here's a tight pinch, see it right there, there's a tight pinch on the bands, is to use the Bollinger Band width tool. Most charting programs have that. And so then what I do is I add a line, in this case that blue line around the 10 level, and what it tells me is that's contraction, an extreme contraction in the Bollinger Bands. And from those contraction come the big moves. So couple points of note, just like overbought or oversold can stay, and often does stay, oversold or overbought for an extended period of time, the bands can pinch and stay pinched for a while. Sometimes it's a one and done, like right here. Here's a one and done reading there. Oh, I'm messing this chart up. One and done, an extended reading, and one and done, an extended reading, a little bit extended, but you can see from those, just follow prices up. That's where the big moves came. Big moves in the U.S. dollar came from those pinches, and usually it's an inflection point. Sometimes it can be continuation of the same trend. Very often it's a reversal in trends. So this was an extreme pinch because the dollar traded sideways for many, over a year, a couple of years, but finally it chose a direction, and it wasn't just a random direction either. You can see that it broke above this trend line here. I have a downtrend line right here. Let me just show you that downtrend line. US dollar, after the bands had been contracted and pinched for a while, we had a breakout right here, and that was a strong rally in the dollar, and therefore that would that put some, it put some pressure on gold. It certainly did, but gold had already come off a pretty vicious bear market. In fact, the biggest bear market in many years. So the breakout there, it certainly put pressure on gold at the end of the bear market, and that was actually led into the lows. Remember, gold bottomed right here at the end of 2015, and then started to rally right around the time the dollar had a pullback here. We had another thrust up, and then another drop. Anyways, I made a mess of that chart. Looks all busy, but I wanted to point out there that we do have, once again, we're at that level. So without fail, so far, that's 1, 2, 3, that was a very near tag. As I said, near tags, 4, 5. These all led to big moves. They also, I'll tell you this, the biggest moves usually come when you have a very strong trend. We've kind of been moving sideways here, but well, you know what? I take that back, because there was a sideways grind and a very big move came. So just something to consider there, that the bands have pinched and contracted down to that level, which again, going back into the 90s, we're spanning back decades here, has preceded these big moves in the US dollar. So I'm doing all this just to say, get your ducks in a row. I can tell you what I think this would align with, whether or not it happens that way. It would align with a major top in the U.S. stock market, and a big rally in gold, so the next leg up. So if the stock market finally tops, you'll probably see money flow into gold and other alternative assets, and you could see one catalyst for that would also be a falling U.S. dollar. Last chart, and we're finished here. This will be quick because there's not too much. This is just, I always look at the Euro US dollar. Here's the US dollar index. So this we don't have to do the whole flip it upside down kind of thing. Here's the US dollar index diverging higher. These are my divergence lines right here. There's your clean negative divergence, unmistakable as the dollar grinds higher, and here's an uptrend line to watch. Not by coincidence, that is this is a rising wedge type pattern. Flip it upside down and you have that falling wedge that I showed you on the Euro US dollar. So they're one and the same. One breaks, the other breaks, and this would be probably the first stop. I don't really, yeah, that's a pretty solid support level for the US dollar. So it would take the dollar index down to about 93.5, and a break below there would be pretty bearish if we get that. I'd expect a reaction there first. Not seeing a whole lot here on the daily chart. This is a Bollinger Band width. As you can see, there's one great signal here if you get it. When you get the Bollinger Band levels, the BB width right here on this setting, 22.0 up to this level, boom, 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 boom. It marks major inflection points in the dollar. And again, this one is a weekly chart here. So that's it. Those are what I'm waiting to see, and I'll tell you, a lot of other people are probably waiting for it too. So we may have to move, and if it starts to break, maybe we'll add that as an official trade idea. I might even put it as a setup ahead of time, but it's just there's so much that goes into gold because, like I say, I don't jump the gun on just a breakout in gold. I want to see the dollar confirm. So it's sort of contingencies, if you will, on the entries for gold trades. Whereas usually a stock is, boom, if the stock breaks support or resistance or the chart pattern, that's it. There's your trigger. All right, we will wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.